Hello, clients, and hope that November is finding you doing very well. Sorry for the delay in this monthly recap, but today is election day. So, what better day than today to get you an update on your precious metals, especially when the news is good? So, from an October recap standpoint, I'll keep it brief and share my screen here for you. And what I want to run through here is just the exciting performance of the metals. So you'll see gold up 4%, closed at $2,743, $44 roughly. That's an all-time high, but that's also the ninth straight higher monthly close. So the streak continues. Shockingly to me, I kind of felt like October might see a little bit of a pullback, but year to date up 32.7%. Year over year up 38%, meaning the last trailing 12 months. So that's just an incredible performance, outperforming all major indices. Silver, very similar, up 5.3% in October. We had quite the run. We closed the month at 32.76, and year to date, it's up 37%, up 43% over the last 12 months. Again, outperforming all major indices. So from a chart standpoint, you'll see gold having just another really fun rally this month in October, and faded a little bit at the end after hitting that new all-time high. And now we'll kind of see where we go from there. We're waiting to see if that was the top, and we can give you some predictions on possible retracement points and entry points. But I love it still. I'm not saying it's overbought. Here is the silver chart. And again, just this huge rally topping out at 34.86. That is a multi-year high and the highest that we've seen really since the tail end of the financial crisis in 2011 and 12. So exciting movements in silver. What did the other white metals do? They also joined the party. Platinum up 1.6% in October. It closed at just over $1,000 an ounce. Palladium closed at 1131. Both of those, again, up, but Palladium, look at 11.7% on its charge. They ended up now flat for the year. So they've been down, down, down. The white metals have come to life. So platinum and palladium are starting to join the party here a little bit. Here's the platinum chart again, just like gold and silver. We hit this high of around 1,054, and then it faded into the close of the month. Palladium was similar. It had a huge rally up over about 1,250. It topped out and then faded a little bit again at the end of the month. So a lot of volatility too. It's not just, this fun close in positive territory, but we had a high of that 2790 in gold and a low of about 2601. That says August. I apologize. Those are actually October numbers. But that was a 7% swing in price in gold, a 14% swing in silver, 10% swing in platinum, and a 20.5% swing in palladium from the low to the high. So huge volatility remains in the market despite this slow, steady two-step up, one-step back climb. Here we see the gold to silver ratio. It hasn't changed a whole lot. Keep in mind that long-term average is not even on this chart. It's way down around 62, 63 to 1. So we're hovering around 83. It still favors silver, but you'll see we're just not getting enough of a breakout despite volatility in the month with a low of 78 on the ratio and a high of 86. That's a huge swing in a 1 month period of time, but we just aren't seeing that opportunity to ratio trade. We need it breaking out one way or another in significant fashion in order for us to be able to do that. This is a key number. I want you to see this 3260. Eric on our team here pointed this out, that this is going back all the way to 2011. Right where we are recording and kind of where we ended the month is this testing line that goes back for decades, actually. So 3250 or so, 3250 was a really hard number for silver to break above. Once it did, it becomes the new floor, and that's what we're seeing here this week since we topped out. That 3250 is kind of now a support level. We'll see what happens, but that goes back for many years. But it was fun to see us get just over, the 3450 to the 35. All of this is happening despite the dollar strength. So look at the chart on the US dollar index. We topped out over 104.5. Okay. And in a blink of an eye ago, we were at 100.5. So gold continues its strong run despite a US dollar index climb. So what are some other miscellaneous considerations as I wrap up just this recap? Federal Reserve meets this week. There is an expectation of an additional rate cut. The first one has proven to probably have been a poor decision. I am anxious to see myself whether or not they actually cut rates further another quarter point. The de-dollarization is ramping up due to distrust in U.S. Treasury. So as we get further into debt and the dollar loses purchasing power, people are turning less to that and more into alternatives, especially gold. So there's a recycling of gold rather than US dollars on the world scene. And a lot of that has to do with BRICS. But I don't want to skip over the fact that we have the election literally today. In the next few days, we'll know certainly a lot more, if not everything we need to know. And go back and listen to the Golden Rule Radio program that we did last month on the reactions of the markets, precious metals markets on elections results. But all of that being said, we don't know. I think a lot of us are just kind of waiting to see what happens here in the next couple of days. Buying has moved into the West. So this 2024 run in gold has been an Eastern phenomenon, which I've talked about. But now we see ETF purchasing and inflows really ramping up in the West. So in the United States and our markets, you're starting to see the buying occur here now. And that's when things can really get exciting and shoot us well north of $3,000 gold. But underlying fundamental borrowing totaled over 2 trillion in 2024. The fiscal year ended September 30th. Yellen says we're going to be borrowing approximately 546 billion this quarter. So adding to it and on pace to exceed a $2 trillion addition to our national debt. But another really bullish fundamental is that gold has ignored that US dollar strength like I talked about and diverged from real treasury yields. And then suddenly, we see this ramping up and buying here, but what's happening is premiums remain soft. So I wanted to show you this briefly because each product has a different premium, which is the ask over the spot price and what that percentage is. And you can see where the best deals are in terms of what the cost over the spot price is. So here the gold bar is 0.8%. Okay, and these are some random selection of products, but the cheapest actually is the 1 ounce Krugerrand. And if you look over here, if you look at the difference between the ask and the bid, this is the spread. And so the American Eagle might have the highest premium. The spread is somewhat comparable to some other products, but the premiums are very low. Same thing in silver. This looks very high as the silver American Eagle at 11%, but that was just 20% not long ago, and we've seen it over 40% here in the last couple of years. So the premiums have really softened in the American Eagle. And again, you'll see the spreads, which is the difference between the bid and the ask, are all pretty similar. But we can look for the best deal, the most narrow spread, the lowest premium, and those premiums are really soft. And that's why we really like the junk silver bags right now. The 1,000 ounce bar, nothing can touch. That's going to be the lowest premium all the time. And that's why we put a lot of larger silver positions in IRAs and those. But you'd like to see those, and call me if you've got any questions on that. Premiums are the takeaway. And you know the number to call, 866-211-8972. Eric and Deanna and I are ready to talk to you if you've got any questions or need a portfolio update. And I hope that there is peace and calm and acceptance after this election. We will all see. And thank you for watching as always, and don't hesitate to reach out.